There we go. Good evening, everybody. You're all going to be envious as hearing about the good time we're having up here at Keuka Lake. We just got done with some excellent prime rib, and we're giving everybody a treat later on. We're going for ice cream. So, hope everybody's having a nice evening. It's relatively cool up here. It's been relatively cool in the Northeast, I guess. We still haven't gotten pictures. We got to make sure we have pictures. Yep, tomorrow morning. Yep. Yeah, we kind of watching the calories went out the window. So, anyways, market still telling us, even though we're in a slow downtrend in the Dow, today we had that indecisive trading day, a doji. Stochastic slowly drifting down toward the oversold area. Whoops. You want to answer who that is? So, anyways, sorry about that one. The NASDAQ has a completely different story than the S&P and the Dow. The NASDAQ did a left-right combo, and as we can see in the stochastics, they're not in any hurry to head down. And we're still, one thing about the NASDAQ is it's not yet closed below the T-line. So I wouldn't be surprised if we're still building up this slow curve back to the upside. The S&P, kind of halfway in between. Opened lower, closed right about flat today. So the only prognosis we can make about this market is it's just kind of moving sideways, which isn't a bad thing because it's allowing some of our stock positions to move up nicely. But crude oil, I don't know whether I've goofed up the charts here or what the heck I've. Yeah, that may be more. All right, crude oil is in the process. If it breaks out here, it may have another run back up to the $112, $114 range. Interest rates, the 30-year bond price is pretty well stabilized in here. Notice it's caught between the T-line and the 50, but absolutely sideways now for the last 2 months. Soybeans, we were looking at this last night because we were trying to show what the doji sandwich was all about. It had a left-right combo, Morningstar signal, doji, and it was trading positive last night. That if it kept trading positive, it would do a doji sandwich. But the reason to illustrate this is if once you see the signals start setting up, especially the doji sandwich, that they're going to move it in the direction of how they open it after a doji. So anyways, and it looks like they're trading a little bit positive after hours tonight. They might want to. And what else? Soybeans were going opposite of what the wheat was doing. And corn might be trying to bottom in here. Now, I did start picking up some of the live cattle. Notice what live cattle did. They did a lot of dojis off of here. Came up, I think the after hours trading took it back down, but they gapped it right back up. Double doji, bullish confirmation today. More than likely, they're going to head right up here for the 200-day moving average. And I don't know what hogs did today. Let's see. Hogs also in this realm of lots of congestion, but if it breaks out through here, you've got another wave starting. All right, and trying to say, oh, gold. No, that's right. I was trying to get around to gold here. Gold did exactly what the little slow curve signal was telling it was trying to do. Came up, hit the 50, pulled back, slow curve back up. Then you had a doji right here, which made it very easy. They were going to move it in the direction how they opened it after a doji, and if they opened a positive, pretty much told us that the 50-day moving average wasn't going to be a resistance. They gap it up. This tells me I got wave 1, wave 2, wave 3, probably taking us back up into this congestion area. Let's see. Cotton, still on a nice strong uptrend. Notice how what it did today is came right down, touched the T-line, and took right back off. Notice where it came from, out of this wedge formation. Very strong price move. Let's see, lean hogs. Lean hogs looking for the breakout up here. And cocoa, J-hook pattern. There's your fry pan bottom, price move, resistance level. Notice what this did right here. Kind of topped out. Instead of coming all the way back down to the bottom of the trend channel, they curled it right around and did a J-hook. Notice your doji right here at the resistance level with a gap up. Pretty much told us that this little trend level was not acting as resistance anymore, that we had a J-hook pattern in progress. All right, what else do we? Oh, the dollar. Dollar is still in a downtrend until it can get up above the T-line. The Japanese yen kind of rolling over here a little bit. It's probably also setting up a wedge formation. And copper. Copper's kind of gapped up. Dojis. I'd kind of watch this level right here to see what they do with the doji at this point. And silver, same scenario as gold. Slow curve, doji right on the 50. Told you which way they were going to take it. When they gap it up, it tells you the 50 is not acting as a resistance. I would suspect, let's make this a little bit bigger, that we need to, that with the gap up from a doji, that we're going to see some more upside. All right. Try to show, we recommended NAT today because of the obvious. The obvious is they took this right down smack dab to the 200. Now, if we listen or we use our trading rules as far as support and resistance, they came up, they didn't resist at the 200, came up, had sell signals. If you were long, you basically wanted to take profits because notice where your sell signals were occurring. A good fur piece away from the T-line. Where was it going to come back to? It was probably going to come back to the T-line and test it. Was it going to support there? We had no idea. As we can see, it didn't support until we saw a doji, Morningstar type signal, bouncing right off the 200, starting back up. What type of pattern do we have in the progress? Nice J-hook pattern which tells us if this moved up 3 points, we move 3 points from here, we're up into the $12.50, $13 area. We also started buying DANG again. Same simple analysis. Fry pan bottom, strong price move, pull back, can't get above the T line or get below the T line. Left-right combo. If this one moved up 4 points, it looks like this could move up into the $14.50, $15 area. Cena, yeah, it looked like Cena. Somebody said they did 21 cents versus the expected 12 cents. I can't get all the, I don't know where Cena closed at around 80, 80.40. Anybody know where Cena's trading right now? All right, and what else do we need to look at? A little bit of a disappointing one with CLNT that had a nice trading day during the day, but then it came back down. But notice it still didn't breach this J-hook pattern. But it better open positive tomorrow and trade positive to stay in this one. Okay, so Cena is down a little bit tonight. You got me guessing here. Got 80, 35. 85, 85, 78. I'll go with the 85. So that means it's up nicely. Vail also was one of our recommendations, and this recommendation was based upon the same scenario. Came up, hit the resistance level, pulled back. Tomorrow morning, the group here is going to go through what we've been through all weekend so far, which is which signals work the best. The best one we know of is our doji gap up. Right next to it is our left-right combo. And if we see a left-right combo, look at the series of dojis right here, followed by a left-right combo. What's that basically tell you? If you just break down the pattern or the signal, it pretty much says after a series of indecisive trading, they've told you which way they want to take it with a decisive candle. Then they gap it up the next day. They break out through here. Where are we likely going to? Probably up here to the 200, but we may see a little bit of backing and filling. So right now, we'd have a sell stop on anything that traded probably back below the halfway point, because that means they're probably coming down to test the 200. I'm sorry, the T line. Another one to kind of keep an eye on is ONVO. No, that's not a very big chart. But notice what we've just done. We did, here again is that psychology. Where do most people sell? They panic sell in the oversold condition. When they gap it down, let's ask them if they can turn that down just a wee little bit. So if they open this positive tomorrow, we basically have a doji sandwich. Tells us we probably got some good upside, but I don't know why this chart is so truncated. Is it an IPO? Okay. RPTP, another fry pan bottom, left-right combo today. If this opens positive, that's probably going to be a good breakout. And where is it going to break out? If you draw your trend line up here, we'll see some more of this. Notice when a trend is in progress, it stays in a channel. When it comes out of that channel and does a buy signal, they usually pop it very quickly back up into the channel and then start a 45-degree. So there's a good probability that coming out of a slow curve, you get that big pop, you're back up into the trend channel, and start the 45-degree off of there. Another slow curve, MYGN. Nice move, kind of a scoop Fry pan, another one you can be buying on positive trading, especially if it breaks out through this little downtrending channel. That gives you some good running room. That was the same scenario as USU. Wrong USU. Unknown ticker. Well, that ain't a fine. S.USU. This is kind of observe the obvious. Scoop pattern. Breakout. Pullback. J-hook pattern. If this opens positive tomorrow, you probably want to be a buyer, because if wave 1, which is 20 points, and wave 3 are equivalent, we're going to have another nice move that takes you up into the 40s. So why would we project that it would go 40s after it had such a big move? Number one, because somebody was buying this with great enthusiasm where it did have a big move. Now there's consolidation. That same enthusiasm can be seen in the next wave of a J hook. OSIS. Here's another little kind of, notice how we got kind of a little morning star type signal, which at the end of a flat trading area acts like a scoop pattern. This takes us back up, or it's been taking us back up into this trajectory, which means it's probably going to do a 45-degree coming off of there. Just something to keep an eye on, that when you break that trajectory, look for a pop right back up to get into that trajectory and continue your uptrend. Okay, a couple that, this one we recommended based upon a positive open or a breakout. Oh, no, okay. Whew. Nice up move, another slow curve. If this starts breaking out to the upside, you want to be a buyer. I mean, if they start seeing some bigger trading going on, that slow curve tells us we could have another move up, kind of somewhat the same magnitude as this one right here. ALJ. ALJ has been a short on our recommended list here for the last, or started shorting about a week ago. But notice what it did right here. Another little doji. We're just now below the breakdown level. If this opens lower, got a doji sandwich to the downside, which means they aren't supporting in this area anymore. You could be wave 1, dumpling top, wave 3 to the downside, giving you probably another 5 points, possibly down to the down from here. That was ALJ. The opposite of a dumpling top is that fry pan bottom. This one I wouldn't be afraid to be buying on positive trading tomorrow. Wave 1, wave 2, look for a breakout making wave 3. And let's see, my list is in a different place. Oh. RH. Let's make this a little bit bigger. RH kind of doing a rounding bottom, and look where it's bottoming right here in the 50 moving average area. I'd get ready to start buying this if it starts breaking out to the upside. Volks, this was one that bounced up a little bit. Did a bullish engulfing today. At some point, there's the possibility of a move like this. If you've got Friday's options, though, it's got to do it fairly quick to get it some good movement. But notice how they stopped the selling here, rolling it over, except today's bullish engulfing signal gives us a little message that if they open this positive, there could be some quick pop to it. Let me see. Not beat the teacher night. No way. No. The gold stocks picked up strength. Notice the big signal off the doji. Remember our very simple little rule that the bigger the signal, the more compelling there's been a change of investor sentiment. And again, observe the obvious. Resisted here at the 200, pulled back, nice strong morning star type signal through the 50. Remember, the first time they hit a resistance level and fail, if they come back up and test it the second time, they're going through. I wouldn't be afraid to be buying this one on positive trading tomorrow because you have a gap up off the 50. And if they go through this level, tells us we've even got more upside. Is that AG? AG, even more compelling in the sense that they came up through the 50, came right back smack dab right on the 50. Doji, gap up, your best friend, then a close above the T-line and the 20, and then a gap up. This is a pretty good chart to say they're going right here to the 200. If they go up to the 200, where are they as far as the trend? Right back in the trajectory of the trend. And DDD. Oh, somebody's making, huh? I don't know. I just got bunches of noises in here. Did you do something? Yeah. Okay. Well. I don't know if it's holding up things. Let me see if I can get it. Now we're getting the old one. All right, let's try XONE. Whale Pshaw. No, it's not that. Sometimes the computer just decides it's not. There we go. All right. Notice where DDD started off here the last couple of days or last few days. Shows that it's supporting on the 50. Did a hammer, gap up, doji, bullish confirmation today. This one started buying the calls right here only because this hammer gap up told us they weren't going below the 50. What's their next target? The top of this trading range. Now, if they get up here with a lot of juice left in the stochastics and they can break through this trading range, let's make this smaller. That tells me I could have another move like this, wave 1, wave 2, wave 3, breaking out to the upside. Okay, now let's try XONE. Kind of a little, let's see, I don't know what this thing is. Another fry pan J-hook type setup. Wouldn't be afraid to be buying this one, especially if it started breaking out through this area. And let's see, that's going to be this one. XIN, this is a REIT. Whoops. S.XIN, which had a very nice chart pattern. Perfect J-hook pattern. J-hook, it gapped up, pulled back. Let's make this bigger so we can see it. But then the next day, they told us the profit taking was over, and now they've broken out. This one's still got some more upside. Now, I haven't been able to check to see what this one pays for a dividend yield, but you've got something that's probably paying a good dividend yield and probably still has a good 20% potential to the upside. CLDX. Oh, pshaw. There we go. There's your doji, gap up at the end of a flat trading area. Look for wave 3 to get started. And the way we know wave 3 has a good potential of getting started is by a doji gap up. That's your best friend. And let's see, if I'm here with some of the REITs, Nally, you might start looking at. It pays a good dividend yield. AGNC has a good fry pan bottom, and notice where it's just broken out through. Out through the 50-day moving average and kind of a rounding bottom, kind of a slow curve. This one could start popping, and this one pays a very good dividend yield. Okay, thank you, Ed. Only a 3.6%. All right. So that's not as exciting as I once thought. SREV, another one that is setting up nicely. Where is it? After a bullish engulfing signal, where's the potential? Probably right up to the top of the trading range, giving you probably a good 10% quick move. And TEAR, we made some good money with this. No. Huh? It's just slow tonight. There's, again, that doji right on the 50-day moving average gap up. Where's your potential target on this? Observe the obvious. The obvious is the top of the trend. Here's the bottom of the trend. If it comes up here, that's a good 33% price move. Let's see what else we got. Oh. This one was one of those that when it broke out, you take profits, especially if it opens lower the next day. If it opens lower the next day, we don't know if they're going to do profit taking or whether it's going to start right back up. If it opens lower and starts trading down, you close out the position. And then you just put your buy stop up here. Then if after the profit taking, when it does close down or stays down here, you want to be ready to buy it if it comes back up through the previous day's close, because that tells you the profit taking's over, but this strong move is still in progress. Same scenario with AMED, where they gap it up, and here's, I guess, I hadn't done this for everybody. This is where, on a big gap up move like that, I come over to my 10-minute chart and my 5-minute chart. Let's make sure we got. If I've got a big, huge move, and in this case it was up like 28% for the day, and you start seeing the 5-minute chart start selling off, notice our sell signal, a doji bearish engulfing signal. Where is it going to go to on the 5-minute chart? Probably back here to the T line. Is it going to stay there? We have no idea, but I'm ready to take profits. If I've got a 28% move in a stock, I'm taking profits there. My 10-minute chart, where is it likely going to come back to? Probably back to the T line. So at best, once they've had the big move, usually this is what will happen. Either we'll do a slow downtrend because they've gotten most of the move out of it. It just keeps trading like this. Now I can always go back and put a buy stop right up here. If they came back up through that level tomorrow, that tells you the bulls are still in control. They're still breaking out. So that same thing could have been done on MDTR. If you go to your 10-minute chart, big move up, never closed below the T line, stayed above the T line all day, closed up here, but on the open, what were they doing? They were doing a kicker signal on the 10-minute chart, taking profits. Where were they going to take profits to? They could have come down here, but at least now you can see that today when they open it positive, you could have been buying right back in, or more importantly, when they came back up above the open of or the close of the other day, tells you pretty much what we want to know. The bulls are still in control. I think I've covered most everything that I wanted to. Let me go to my other. Oh, Tesla. Tesla was downgraded. Oh. Tesla was getting downgraded, but notice what it did. It did a little gap up. Might be time to take some profits, except there's still one factor that's been kind of consistent. They've only had one day where they've closed it. Yeah, they closed it right here below the T line. This would have been a day that if I closed it out, I would have been buying it right back when it was trading back up above the T line, because what's the T line telling us? As long as they trade above the T line, they're in a definitely in an uptrend. So at this point, if I was holding Tesla long term, basically I wouldn't worry about it until it closed below the T line, number one, and I'd start worrying about it long term, even if it closed below the T line, if it didn't close back below the 50-day moving average. And okay, I guess I'm getting most everything I need to. Let's see what else say. Oh, I know LEDR. It's one that we've been following, and it's got a nice chart pattern. There's your fry pan bottom. There's your wave 1, 2, 3. There's your J-hook pattern. This one, I wouldn't be afraid to be buying on positive trading tomorrow. What's this telling me? That there's still lots of good force to this upside. They can't close it below the T line, and they've been consolidating on the way up. This tells me there's probably, especially coming out of a fry pan bottom, kind of tells me there's still more upside until you see a dramatic sell signal. I'm guessing that's about all I can come up with. Oh, we also recommended BlackBerry. Why? Because we had that little stutter step, gap up again. Now remember, when they start gapping these up, that means there's a lot of force. I wouldn't be hesitant to still be owning this. If it runs into a little day or two stall here, that means they're already out into the gap area. If they break through here, you got next target and next target to fill the gap. So I'd look for some very strong move. I was reading. I can't read and talk at the same time. I would look for some very strong upside left in this. So with that, I guess that's about all I've got today. I'm looking for, no, I'm not looking for. Let me see what I did as far as trying to pick up some interesting things. Oh, so one I'd be kind of looking at for a positive quick trade tomorrow is ONVO, because of the doji sandwich setup, that you could have another good percentage move. So with that, yeah, 10 yards penalty. Let's see. I'm confused about where to enter a scoop versus a J-hook versus rounding fry pan or slow curve. On your webinar, you say enter the scoop on the breakout. Could you please verify the proper entry for all the others? All right. All right, here's your fry pan. If you can recognize that you're starting to see a fry pan, but notice this fry pan is a little bit rough, but it's still a rounding bottom. We had a gap up from a little piercing signal, double bottom, closed above the T line. You could be buying here. Where's your first target? This level, the beginning of the last peak. Once it got to that level, it was either going to do one of two things. It's either going to fail, which tells us we had a double top, or it breaks through. Now, we know an inverted hammer, which should be in the oversold area. But again, we're coming out of a fry pan bottom, so stochastics are going to be toward the higher end of the range. That even on a inverted hammer up here, it basically tells us a very quick story. That if they were taking profits on this day and then opened it right back up again, the profit taking's over. They're still heading up because there's been no confirmed sell signal. So you can either be buying here, anticipating you're going to have to either sell it here on maybe a moderate profit, or that it could break out. On the other hand, you could be more conservative and say, I'm going to just wait for it to break out and then be a buyer. Now, if you know your patterns, meaning if you know what comes after a fry pan bottom, which is a very strong price move, then we also know what a prerequisite is for a J-hook pattern, which a J-hook pattern is a very strong price move. And then an indecisive pullback, and then they start taking it back up. So we were buying today after it did a left-right combination. This one's going to be recommended as a buy tomorrow on a positive open. If they break through here, what's our upside potential? If this was a 3.5, 4-point move, we're going to have another 4-point move to the upside. So you've got different opportunities of where to buy based upon what your risk tolerance is. You could be buying on the breakout. You can be buying in anticipation of the fry pan bottom. You can be buying right here. If you buy at the beginning of a J-hook pattern, what's your upside potential? Well, number one, your first resistance level is here. If it failed, all right, maybe you got out with a little bit of a profit or even broke even. Number two, if it broke through, you got in early, that you've got a good percent move. Number three, if you got in early, where would your stop loss be? Basically, you wouldn't want to see it close back down below the T line, because if it opened here and closed down here, what's the trajectory of your J hook? It's pretty much disappeared. You're back out of the trade. On the other hand, more conservatively, you have a higher probability that once it breaks through, your J hook pattern is working. Okay. That's right. One doji sandwich and a beer for everybody. All right. Any other questions on candlesticks? What is the significance of a long bullish tails on USU? Almost every day it runs up and then pulls back. Am I looking at the right one? I thought USU was just kind of a not really anything too significant at this point. The pattern is more important. Now, you have a doji here, and this is a very telling signal. They're going to move it in the direction of how they opened it after doji. So if they opened it lower and started trading it down below the T line, what's that telling you about the trajectory of your J hook? It's disappeared. You're out of the trade. If they open up positive, which way are they going to move it? They're going to move it in the direction how they opened it after a doji. That means they'd be moving positive and confirming your J hook pattern. And CLNT also has that same prognosis, that you had a big spinning top, but you're still in the trajectory of the fry pan bottom, but it needs to open positive and trade positive to tell you to stay in it. Somewhat along the same lines as Bah Humbug. Can't remember which one it was. Oh, I know. CVC. CVC had this big hammer, but they didn't sell it off the next day. Sold it off a little bit, but came right back. So if they had opened this the next day and traded it down here, that tells you this is over. Right now, you're starting to get some whipsaw action at the end of your fry pan bottom, which means there's a lot of interest starting to come back into the stock. Do you usually place stops at the T line? No, I want to see it close below the T line. Remember, the candlestick signals are formed by where it opens and where it closes. The shadows is the price range. But to the Japanese rice traders, the close and the open are the decisions, the first decision and the last decision. And the last decision tells you what the final decision was for a price move that day. So essentially, we want to see it open, I'm babbling. I forgot what. That's pretty bad when you start a sentence and you can't remember how you're going to end the sentence. Can I shrink the chart to get more on the screen? All right. Okay. How far is too far away from the T-line to buy? Yep. At this point, you probably don't want to be buying unless you're taking some profits and you want to add to that. You could be buying if it comes back up through Friday's close, but this is not the place to be buying. What we're looking for is those signals that tell us where the enthusiasm's coming in. We know that a doji followed by a gap up is your best friend. And meaning best friend is that this is going to produce some very strong price movements. Is this stronger than a kicker signal? No. But for every time you see a doji gap up, every time you see a kicker signal, you're probably going to see 5, 6, 7, 8 doji gap ups. So it's your best friend in the sense that it's a strong price move and it happens quite frequently. A left-right, Lauren, our left-right combo, as we saw in Dang today, is when you have a doji. Make this real big. A doji followed by a bullish engulfing signal. That combo is just kind of a psychological strong buy signal in the sense that we had a day of indecision and bam, they told you which way they were taking their decision. And if we can add that to what definitely looks like a pattern, like a J hook or a cradle or whatever, it adds that much more probability you're in the right place at the right time. Okay. Gilly, no. The significance of options expiration day is that if you are trading a stock that is trading at $50.43, that more than likely on Friday afternoon of expiration, they will close that stock at $50 even, because that way they've made some options, the option marketers have made some options worthless. But it doesn't affect the trend of the stock. All it is a one-day manipulation to get a stock right on an even number. So no, you stay. The only thing that gets you in and out of the market is what the charts are telling you. Who's buying, who's selling. If I'm holding stock that is trading sideways along the T-line, where should I place my stop? Lori, give me an example. You said to buy equal dollar amounts of stocks. Do you round off 100 lots or buy odd lots? No, I round off at 100 lots. If I've got a account where each position is $50,000, that means I don't want to have one position at $46,000 and another position at $84,000. I want to have a $46,000 position and maybe the other next one is a $53,000. I want them approximately the same. So if that meant that to buy $50,000 of stock that one order is 1,400 shares and it came out to 53,000. That's close enough. The reason for that is our worst bugaboo as far as losing money in the stock market is our own emotions. And as soon as we decide we're going to put a little bit of our own emotion into a trade, so that if your normal trades are $50,000 and then you say, man, this next trade's a great one, I'm going to buy $80,000. Well, two things happen. One, if you've got 10 positions in your portfolio, I can pretty much guarantee you're going to spend 80% of your time watching the one that you just put $80,000 in. Two, if it doesn't do exactly what you think it's supposed to do, your rationale is going to be, they haven't seen why my intelligence said this one is going up. I'm going to hang on to it for a couple more days. So now you've sold it when it wasn't working 2 or 3 days longer than you should have, instead of saying, this is just one unit of my portfolio, close out that unit and go on to the next one. But if you are in options and you want to close the position before midday on option Friday, unless you can sit there and watch it how it moves and maybe gamma trades if appropriate. Okay, I probably was too long. If you probably don't want to be, if you're trading options, unless your chart is moving in the right direction, you definitely do not want to be still owning it on Friday. Unless that's your modus operandi, is to buy options on Friday morning hoping there's going to be a big price move. But that's a whole different strategy than seeing what your chart is doing. Most people have a hard time figuring out direction of a price. Most people have a hard time figuring out magnitude. If you figure out those two, you're relatively successful. But you don't want to put the element of time in there on top of that to make it even more difficult. So if you're doing time or magnitude and direction, try to take the time element out of that equation. Okay. Do you add to existing positions? No, Sam. If I'm buying a position, it's a $50,000 position, it stays at $50,000. Now, that's not to say that if I'm trading options and I've got 3 contracts of live hogs and they are breaking out, I might add 2 more positions of live hogs or another 7 contracts if it breaks out to another level. I'll do that. But that's because when a trend occurs in a commodity, it's usually going to last for a good while. So the DAG chart that we are looking at, it opened down today and then went up. Yes. It closed here, opened here, and then started trading positive. So by the end of the day, what were we seeing? We were seeing a bullish engulfing signal. What type? Okay, okay. That causes you like hogs. That's caused you like hogs. That's right. I like hogs. Will you ladder your trades if the hogs are oinking? Oh boy. If you buy a $50,000 position and then have a 20% increase, do you sell or adjust to even dollar amount? No. When I buy a $50,000 position, it's 1 unit. And the reason I'm buying it is because I've had a buy signal on the charts, and I'm going to hold that position until I see a sell signal. Now, that doesn't keep me from seeing a big price move in that $50,000 position that I might take off a third of a position, and then another third, and then the final third. But that's basically because if it's starting to move and getting to the area where I think it's starting to take time to take profits, I'll start. The Japanese rice traders say you sell your last bag of rice after the peak, which means when you get near the top, you want to start taking some profits. Okay. All right. With that, Jim, let's do the double line, and we're only going to do approximately 10. Wow, no, I can't read that fast. Jim, the double line. Oh, no. We're going to only have time for a few minutes because I've got these guys just wandering around saying, when are we going for ice cream? When are we going for ice cream? So, that's right. They want to do the math. That's right. All right, AXL. AXL, nothing real exciting about it just yet. We did left-right combo, but we did another doji day to day. If I was buying this, I would be looking to buy once it's kind of broke out through the tops here. That would tell me my J-hook pattern is starting or in progress. Apple had a nice move back to the upside. Now, remember, we had the NASDAQ trading positive and the Dow trading slightly negative today. We had Apple up big, which probably was an influence on the NASDAQ. But right now, all we can see is that the Apple moves up, pulls back, moves up, pulls back. If they break through the 200-day moving average, I'm guessing dime to donuts, you're going to have another leg like this. And the nice thing about seeing a leg like this is you don't have exuberance in this uptrend. You have an up move, profit taking, up move, profit taking. You're not having people jump in here with great enthusiasm where it's moving up everything up into an overbought condition. Reggie was having a hard time getting out of its own way today. Some people ask, what should I do with the options if I have it? At this point, stochastics trading flat. You've got a wedge forming, but I would be out of this position until I see a very strong buy signal that breaks through this level. BTU. BTU is setting up nicely. Notice what we had over here. Morningstar signal closed right on the 50. Was the 50 resistance? Nope. Broke through it. Today we did a doji. What do we do tomorrow? If this opens positive, you buy immediately because you've got the potential of a doji sandwich. GMCR. I don't know why this chart, how come this chart keeps doing this? GMCR, notice when they gapped it down, what was happening right away. The buyers were there. I wouldn't have been in it. I would have probably closed out the position. But now that it's climbed back up above the T-line, I wouldn't be afraid to be buying on positive trading at this point. Because if it trades positive, where is it in the trend? It's still in the uptrend with kind of a cup and handle setup. Notice what happens after a fry pan bottom. If it doesn't break out, you've got also a whipsaw type action over here that still allows you to tell you that this is still built up of investor sentiment. They try to smash it down, but the investor sentiment keeps pushing it right back up again. Starbucks. Starbucks is staying above the T-line. I wouldn't be a buyer here, but if I owned it, I'd continue to stay long. And Walgreens. Another one that if it opens positive, you've got a wave 1, wave 2, a little bullish engulfing signal. This one should be starting wave 3, but it definitely needs to open positive. Dow Chemical. Got Dow Chemical. This one's very simple. You're in the uptrend, but you've got a bearish Harami in the overbought condition. This one has to open positive and trade positive to stay in it. If it opens lower, more than likely it's coming back to test the T line. Then you have to see what it's going to do at that point. Google. Well. Google, if you're short because of the sell signal, you stay short. But notice where you hit bottom today, right? Almost smack dab on this support level. If this opens positive tomorrow and I was short, I'd be covering. It's probably going to just bounce up to the T line. But where do the most people sell? They panic sell at the bottom. If you see a gap down at the bottom of a trend and see a candlestick reversal signal, start watching for the buying to come back in. Netflix is doing a slow curve. Wouldn't be afraid to be buying this one on positive trading. URRE, another one that you can be buying on positive trading, but it needs to get back up through the T line. And Mako, another one that needs to see positive trading. If it opens lower tomorrow, I'd close out the position, even if it just bobbles here on the T line, because you've got to wait for the next buy signal. And let me see what else. I don't know. I can't. I've never figured out how to get to. I've got to figure out how to get the currencies over here. Let's see. BTU, Apple. UNG. UNG is right here on the T line. If you're short, you stay short. Today, I probably would have covered a short position. If it opens lower, you can always reshort it. But if it starts trading positive from here, then you can go long. And Santa is not showing anything. I would not be long. I might not be short this one because it's probably still in an uptrend. But right now, I would have been out of the position. AEGR has been acting nice. It's done the slow curve down here. Still have the call spread on this that hopefully will be expiring at $5. So I think I bought it at $1.40. You had this slow curve pop. You're going to have another slow curve. So probably tomorrow, if I've got most of my profits out of this spread here, I might just close out the position and add another spread up on this side. ISRG, that looks flat. And if I wouldn't be long, I might be more apt to be short on this one right now. ACAD not going anywhere with any great enthusiasm. Another one that I wouldn't be long or short on this one right now. NTE. NTE is another one where you've got the bullish trading above the T line. It's not a reversal signal here, but it's telling you if you're above the T line, you stay long until you see it. Now this one is the signal. You had the inverted hammer, which is a Gravestone Doji bullish confirmation. Now you've got another bullish engulfing signal, pretty much telling you that even though this was not a reversal signal, it wasn't a bullish engulfing, it wasn't a bullish harami, but these are confirming that the bears are starting to take control, or I'm sorry, the bulls are starting to take control. Okay. I'm going to kind of call it quits because we're going to go get ice cream. So right now, this market is still not telling us which way it really wants to go. fairly indecisive, and it's not really going anywhere. But again, this is our compelling factor that tells us that the bulls are still trading in this market. Is the NASDAQ is staying up strong, even though the Dow is selling off. So we're basically moving sideways. You're starting to see some, just the fact that they're buying one area and selling the other area tells you that we're not selling off. We're just kind of shifting funds around. All right. With that, thank you for coming tonight. We're going to go get ice cream, and then we're going to go look at a Model T Ford truck. So we'll see everybody in the chat rooms tomorrow. We'll see.